Hello, this is Pat Walker at MissionWinners.com, and I am making a video for Robert. Robert, it is a pleasure meeting you. Thank you for being a VIP. This is great. You are, I do believe, the first VIP we've got from Norway. We have VIPs from all over the world. We've got in fact, we got VIPs from Iceland. How about that? But I think you're the first from Norway, which is exciting. I love that. I love that. Welcome to the team, sir. I'm glad you're part of it. So let's get down to it. And first off, and by the way, I thank you for the compliments. You've read the book, How to Make Money in Stocks? Exactly. Hours and hours of IBD meetup. Lee Tanner's good. Lee Tanner's good stuff, by the way, okay? I am, just to clarify my background, you probably know this. I've been to Cancelim Level 3 and 4. I've sat down and had lunch with Bill O'Neill twice. Just sat down and talked with him. And it wasn't like, 40 people. No, it really wasn't. Believe it or not, it just got to be him and me, which was, I'm thankful for that. And I just asked questions. Very pleasant man. So I'm glad that you've read the books. I've got another book for you that I would suggest. Mark Minervini has a great book, Trade Like a Stock Market Wizard. He's a good man. Mark Minervini. I would encourage you to read his book also. It's really good. I would also encourage you, because you're a student of the markets, I can tell, is if you have not read Market Wizards, the first book, I encourage you to do it. Market Wizards, the first one, especially the last chapter in the book with Dr. Van K. Tharp. It has to do with investing, investor psychology. It is a wonderful book. Again, I can tell that you are a student of the markets, and I always sit there and think, what information can I share that would help people? That would help. So I wanted to share that with you. Maybe you've already read them, and if so, I wasn't trying to offend you, but if you have, bravo. If not, they're worth your time. So, and again, I love that you're, the IBD media presentations, you're motivated, and that's huge. All right, so let's get down to your question. Your question regarding trigger price on the key list. It seems to me that the trigger price is extended, that if from the base breakout, is that trigger price the re-entry or add-on buys? Great question. Let's look at an example here. IIPR. Here's the long base breakout right there. That's the initial position. There was a secondary position right here going across these tops. I'll even draw it for you. How's that sound? If it will let me. I don't think it's going to allow me to move that down, but you can see the little line right there going across those tops. This is very important. Rules of proper pyramiding, and you probably know this. It goes with Bill O'Neill. And this is Cancelim Level 3 and 4. You know all about this. 50% of your position bought right here. If the stock goes up 3 to 5%, you buy another 30%. Stock goes up another 2 to 3%, you buy another 20%. 50, 30, 20. If it doesn't go up, we don't add to it. By default, I always measure risk. You can see this is the low risk entry spot on IIPR. Right here is more aggressive. A, it's a shorter base, and B, it's extended from this lower, longer base entry. I always measure risk. If risk is high, I will buy less shares, and you've seen that probably in the VIP feed. I'm very risk averse. I will tell you this. I want to make money, but I'm not a hero and I'm not a gunslinger. I'm always measuring risk, so by default, a longer base breakout carries less risk, so I will buy more shares. A shorter base shelf, right here, is riskier, so I will buy less shares. Here's another example. MDB, breaking through here, great base. Right here, this is just a short pullback pattern. By default, let's quantify this statement, okay? Again, I think that's very important. Let's do here. Person could buy, we'll make the math simple, 100 shares. On this pattern, this shorter pattern, which is now kind of broken after today's action, I'll shift it back one day. On this pattern, if it had lifted off here, because it's just lifting off the 8-day and it's a shorter little shelf, Right here, longer base, 100 shares. Shorter base, 40, 50, 60 shares maximum. That's it. You can say, why? This is riskier than this. So we always adapt accordingly with share size. And that works out great. I will also share this with you, Robert. I will take a longer base breakout any day of the week over a pullback setup. Pullback setups, and you've seen me in the VIP feed. Pullback setups are more aggressive. They have a higher failure rate. There's more wiggle in them. You can take those three variables or factors and say, yeah, you know what? I put that in there. By Jove, I'm not going to buy as many shares. You're smart. That's the way we do it. So, and let's just take this a step further. Let's take a look at IIPR now. Right up here, there's no entry on this. The little shelf right here, that's good. But up here, there's nothing here, so there's nothing to do with it. We just let it work. Just, let it keep on going. That's what we look for. So, and again, rules of proper pyramiding, long base breakout, 50%. At that point, extends 3 to 5%, we will buy another 30%. Extends another 2 to 3% above that, we will buy another 20%. 50, 30, 20. If it does not go up in price, as you know, because you're a student of the markets with Lee Tanner, I don't chase it. I don't buy more. I'm not going to throw, I hate to use the word throw, I am not going to put more money in something, and I know this is what you're alluding to. I will not put more money in something that doesn't earn the right to have more money put at it. Really adamant on that. Very adamant. Very important. Do you use pocket pivots? Yes. Yes, but I take it a step further. And you'll see this more and more in the VIP feed. And I'm sorry this is going too long. I hope this, I'm not trying to irritate you. One of the best investing tactics people can do is they see a long base breakout. As it's approaching the pivot on the day chart, punch up the 30-minute and the hourly chart. Look for volume coming into it on lesser time frames. If there isn't volume coming into it on lesser time frame, I'm not going to buy it. But that is a great tactic. I've been using that for, geez, way over a decade. Probably closer to the year 2000. Look at the daily chart, fine-tune it down to the hourly and 30-minute chart. Is there volume coming into it? And if volume is not coming into it, kind of related to pocket pivots, if volume's not coming into it, I'm not buying it. You did your pocket pivots with Gil Morales, right? I'm not doing it. So anyway, I hope that helps you. I hope that clarifies it, Robert. And if not, please say, Pat, I still have a question about this. Please keep asking questions. And again, it's a pleasure meeting you. I love this. It's exciting because, again, we have people all over the world. So thank you for being part of the team. And I encourage you, please keep asking questions. And I apologize if this video was too long, but I wanted to do it justice. Thank you, sir.